All right, what's going on, guys? I'm going to make a video here to go through a few things for the basic last trading week. I'm really going to focus this video on crude oil. Then I'm going to go through a few updates as well into what to expect the next kind of couple of months going forward. So there's going to be some changes, and I'm just going to go through that. But I'm going to start with crude oil and go through kind of analysis. So let me just start in the large time frame and go through. The reason I'm starting on crude oil is this is kind of a market, and I'm just trying to explain this to you guys. Where I guess this is a little bit more in depth of a topic, but I'm going to try to explain it to those of you watching now. So this entire market has been sold off. You had this huge run basically the start of the year, then you kind of pulled back. And right now what you're getting is you're getting basing, right? So if you've ever looked at like a stock or any asset class and you're like, man, look at this massive trend this thing had. I wish I had bought that trend. And most of us do, whether it's stocks or, Bitcoin or oil, whatever it is, you always kind of look back in hindsight. You're like, I wish I would have bought this. So, and I'm not saying that this is the exact key to figure out a trend reversal or to find like the start of a trend, but I'm trying to show you from an analysis standpoint, both technically and fundamentally, how you put together a trade thesis to develop those kind of early signs to get a trend. So you had this massive move down in price, a massive move here, and this kind of move here. So what you've been doing is consolidating. I'm going to show you what price consolidation looks like. So you have to understand that, WTI West Texas Crude, right? This is a physical asset that's traded. You and I, most traders, you only see the electronic side of the business. You're just trading these contracts, but you don't see the actual fundamentally the drivers behind this, that's trading West Texas or what WTI Houston or Brent, whatever the different barrels of oil are trading. You don't see that. So what we're going to discuss is there's kind of a trading range forming, and this might start to break out, right? And I'm not calling 66 or 68 or 70s or a new high in oil, but what I am trying to tell you is for whatever reason this is kind of basing, you kind of have to watch this. Now, I'm going to show you what this looks like when we get into small time frames. I'm going to show you what a trading range is and how it's formed based on fundamentals, right? So again, oil needs a fundamental reason to go higher. Let's start there. So oil needs a fundamental reason to start higher. So this is one Wednesday. This is a report. This is a report, and this is a Thursday report because we had a missed day. So basically, you've had 3 weeks, and I'm going to show you what this has been doing in 3 different crude oil reports. So you had this report, price dropped right back into the support level. Now these are probably stops, but again, most of the demand for this particular asset class took place right where these candles were. So again, some orders here, but most of the trading, the sellers, price was absorbed around 51.50s of that zone. But now you get back into this range, right? You get a nice little run and you get a pullback. Wednesday comes again, right? The report is, there's a build on oil, and I'm going to explain that in a second. Kind of moves up, doesn't really do much. So last week you end the week higher and you instantly drop, right? You have the report again, you get a rally here and a move higher. So what this has basically done, I'm going to go through and show you a few things, is in essence, this particular market has basically formed 2 trading ranges. Right? Trading range 1 is basically where this report is at. Price is just holding steady, right? Because there's a lot of build on oil. There's too much supply in the market, and it's just in a trading range. Right? So trading desks, oil desks that are trading this, you can write options against it. You can trade short-term 5-cent moves, 10-cent moves, which is what I don't like to do. But again, the markets, the major desks are holding price basically in a range. And you're getting these little spurts of price where price will trade off, and you kind of get a breakout here, but it gets rejected, a breakout, and it kind of basically send it back to this range. So what you're looking at is kind of a few data points on this to understand, look, even though there's a build, and I'm going to show you now in oil, there's been massive builds. There's so much supply coming on market. This is still not dropping, right? I mean, and it's continuing to happen over and over. So when you get these massive price builds and it's not dropping, you need to go back to standard economics, right? Supply and demand. If there's too much supply in market, right, why is this not dropping? Right? So the market is smart money, smart for whatever reason. Again, you don't have to figure that out. You don't have to put all those pieces together. You need to look at this and say, okay, look, for whatever reason, this is holding price here. Right? So you've got to look at this, and this is what I'm looking at, and I'm long the oil markets through December and January call options, the futures call options, and I'm trading the actual futures contract around the core position. So one, I have a core position, right? And I'm not going to pull it up. It's just a Saturday morning. I made this video kind of late, but for some other students that I've taught, I've discussed it. A core position, and number two, you just trade futures around it, right? You have one position, you can trade around it. So basically, this is forming a range. That's number one. Number two is, if this decides to break out of this range, you wake up, you remember 6-7 weeks ago, the Aramco facility was hit with a missile, right? Ridiculous. But there's situations in the oil markets where that happens, right? Or there's a pipeline that breaks, or supply, ceases. Something happens. So you want to have long exposure in your portfolio with how do you express that, right? Having oil contracts too sketchy for me anyway, right? So I have a core position, and if it takes off, I can catch a move. But what I'm seeing is, from an analysis standpoint, is look, you can trade this range, right? If you want to trade futures here at this point, or two, you can have a core position, right? So I'm going to explain to you now that the kind of second part of this video. I'm going to pause it. I'm going to bring over the EIA report, and I'm going to show you that. Okay, so the first thing I'm going to do, I'm going to take it over to EIA. So you can actually go to their website here. You can go to events, and they have basically webinars to teach you, so you can learn more about, right, the EIA reports that come out, et cetera, right? So you can click this. There's resources. You should use this website. It'll give you information to understand how these markets work. If you understand how crude oil markets work, it's pretty, I don't want to say it's complex, but there's a few things you can understand from a fundamental standpoint that make this a lot easier. So that's the first tool I'm going to give you on resource. Again, look through this. Those of you that are serious will look through this. Some of you are still stuck on, like, again, this nonsense of trading indicators or dark pools or whatever else that's been sold to you by people that have never traded or don't know what they're doing. But this is where you need to go for data. So, you need to look at the fundamental on this. If you look at it, awesome. I'm just trying to point you to the direction to make it easier for you. If not, obviously, it is what it is. Okay, so let's take a look at the recent build. So if you go to forexfactory.com, some of you have seen this, some of you haven't. This is a report for next week. It shows you, right, what the forecast and what all this means. So some of you say, well, why should you care? Right, it shows you right here, and it tells you why you should look at these numbers. So, last week these are all builds, or these are all supply coming on market. Right, there's a draw here, right? So you've got to look at this and see these numbers. All these have been builds, right? And that data that's coming out, right, is indicated here. So you've got this trading range during these events, and it hasn't really done much. So September 11th, I believe, was back here sometime, and price actually did fail. Fundamentally, when that information came out, there was too much supply one of those days. I forgot what it was, but set the trend lower. But now you're still getting too much supply, and the trend's not breaking, right? So that tells you there's demand from a fundamental standpoint. And a technical standpoint, you look at this, there's demand on this particular market. So this section, until it breaks, right, and I realize this is a wide section, until this breaks, it's a demand zone. So when you look at it from a large time frame perspective, let's go to a daily. Right, one of the things that I try to do from a technical perspective when you develop a trading thesis or an idea is try to do that. So I'll try to develop the second part and say, okay, look, I know I'm in this range, but if this breaks, where are areas of interest? So could price break out to a certain level? Right, and one of those areas is kind of up here, 56, 57s. So you try to develop a thesis ahead of time. Whereas, again, some of you that have traded, that I've taught over the years, come in with this mindset of every morning you're looking at a 2 or 3 or 10 cent range, and there's no concept of seeing the forest or the trees, and it's nearly impossible. And this is why a lot of traders, legitimately struggle. And you have to realize this. And once you realize this, changes start to be made. But if you can't realize different perspectives of how markets work, it's tough to actually make money in markets. So that's kind of a shorter analysis on oil. Hopefully that made sense. I think it did. But again, I think this is going higher. That's analysis. There's a few more things I'm leaving out just because of sake of time. But that's kind of part one on oil. The next part, I'm going to go over to S&Ps, talk about it briefly. And then I'm going to go over a few announcements in the final part. Okay, so as far as S&Ps go, let's go over to the weekly on this. So that Brexit deal looks like it passed this morning from what I saw in news. So this is probably going to trade a little bit higher. I'd imagine up into 30-20s, right? So this weekly candle was bullish. And again, if you don't understand how to determine bullish or bearish, I doubt you're going to get in a trading book again. Some of you are that I've talked to sent emails in. You're still stuck on wanting to do this on your own, and you think that there's going to be a light, that comes on. You have to understand how price charts work. That's, legitimately an answer to this. So this will probably trade a little bit higher on this from that news. I don't think we're going to getting really much above this. So there's probably supply coming into the market. So, 3,000, 30, 20, probably a sell-off coming. So again, either that or it's distribution. What I mean by distribution is there's no trend, but basically you're going to get ranges, kind of like oil is right now, until it finally breaks or breaks out. So that's kind of the S&P. Again, there's nothing too exciting to discuss on this. There was a pretty nasty move yesterday, which was awesome. If you traded it, right, the kind of a breakdown in range here the other day, or Friday, sorry, this was a pretty clean move. Now, obviously, price sucked right back up. This was a very bullish close. It closed above a monthly level. So again, with that Brexit news, I wouldn't be shocked to see this trading, up into 3010s, maybe a little bit higher. So that's kind of the analysis here in S&Ps. On the downside here, 2960s. But again, this is really just forming a wide trading range, right? So basically, you're just getting massive range on this, and that's good, right? So you can make money in this. You just have to be a little more precise. It is hard, but this is just forming a large trading range. So this is kind of where we are in the current value in S&Ps at the current time. So yeah, that's going to do it for me. I'm going to stop the video. I'm going to go over to a few announcements, and then we'll end the video right after that. Okay, so October is going to be the last month that I'm helping with, give me just a minute here, that I'm helping with this website with Ophir and Mimi on this and kind of coaching with them. I'm not sure they're keeping this up or doing much more with this year. I'm taking a consulting agreement with another company, so my obligations are tied to that for 2020. And I also we'll be launching a commodity trading advisory, so managing money for small companies and then traders going on. So I put my money into that. My own personal money that I'm starting the seed fund, and then next year I'll be basically running money as well. So I won't be teaching with these guys anymore. I think they're going to be shutting this down probably January. That's kind of my guess on this, because they're going to be working with me on the money management as well. So that being said, on the futures course, if you're interested in the futures course or the technical course that's offered, right now they are at $19.97. This is going to basically $1,000. So both of these courses, the futures and the professional course, will be $1,000, and then the access will be for 90 days. So you guys have access to that. If you want to sign up on that, you need to use a contact form. Don't email me directly because they're handling it. So use a contact form. I'm going to put a email in the newsletter, and you can basically go through that. So again, I won't be doing much. This will probably be the last video for that. For the current students, you guys, I'm in a chat room with you guys, so you guys have access to it. Well, that'll kind of be it, because I'm going to different consulting, different business ventures. So that's kind of it for me on that. If you guys have questions on this, be sure to reach out. Some of you who already reached out know where to go. Some of you who haven't reached out, just send an email into the contact form. So that's going to do it for me. Again, as far as the markets go next week, S&Ps is kind of the last focus, but again, right now, legitimately, oil is what I'm really watching. I'm really watching to see if we get a trend move breakout. And I think we're pretty close to this. So yeah, keep an eye on that. So that's going to do it for me. Enjoy your weekend. If you guys have questions on the transition period, it shouldn't be that big of a deal because most students already know. But if you're not a student and you have questions about the course, we'll answer them. But if you have questions on what I'm doing, probably not going to answer it, just to be honest. But if you have questions on the course, reach out and we'll answer those for you. So enjoy your weekend, and we'll go from there.